Dirty dealings, corporate battles, consumer woes. This is Evening 5. EcoFirst Consolidated is alleging that its former directors had conspired with Kerjaya Prospek Group in the award of a 404.4 million residential development project in June last year, which was subsequently terminated in November. After the termination, Kerjaya Prospek filed a lawsuit against EcoFirst wholly owned unit, BCM Holdings, claiming 20 million in termination charges. BCM subsequently filed a counterclaim against Kerjaya Prospek, while including its former CEO and executive director, Datuk Tiong Quing Hee, as well as substantial shareholder Tan Yu Tiong as defendants. In a stock exchange filing on Friday, Kerjaya Prospek updated that a case management was held on March 19th, during which Tiong requested for an extension of time until April 10th to file his statement of defence. The court allowed the request and fixed April 25th as the next case management date. Tiong had retired from the board in October last year after expressing his intention to not seek re-election at the group's annual general meeting. Tan is the single largest shareholder in EcoFirst with a 13% direct stake and 11% indirect interest as at January 22nd. BCM is seeking a declaration that the contract for the construction of the residential development in Kuala Lumpur awarded to Kerjaya Prospek last June is invalid and unenforceable. The Ministry of Home Affairs has clarified on Friday that employers cannot apply for the foreign worker quota that will be freed up by the cancellation of active but unused allocations after March 31st. Minister Datuk Sri Saifuddin Sution Ismail explained that Malaysia currently has 2.1 million foreign workers and that the deficit of 400,000 needed in the country will be addressed through the Workforce Recalibration Program. He also said the permitted ceiling for foreign workers in the country stands at 2.5 million and reiterated that active quotas for which levies have been paid by visas with reference have not been issued by end March will be nullified after that. The Workforce Recalibration Program introduced by the government serves as a targeted employment strategy to meet the demand for foreign workers in the country. Saifuddin's clarification comes after criticism from business associations such as the National Chamber of Commerce and Industry of Malaysia and the Federation of Malaysian Manufacturers over the government's sudden restrictive foreign workers policy when it was announced on March 1st, giving just 1 month's notice to cut short the validity period of those holding active quotas. FMM had said that the government's inconsistency in policy decisions would negatively impact the local business community, potentially harming export orders and undermining confidence among foreign investors in Malaysia. But the government is not budging on its decision to nullify active but unused quotas after March 31st and will only allow employers with approved VDRs to bring in workers on those quotas up till May 31st. This means the government will halt the entry of foreign workers under such active quotas into the formal sector from June 1st. Alpha IVF Group said that it is in a sunrise industry in Southeast Asia with strong demand for in vitro fertilization treatment amid declining birth rates. According to Group MD Dr. Colin Lee Sun Soo, women are opting to start families at later ages, typically in their early 30s, potentially leading to lower chances of pregnancy. Coupled with the significant decline in sperm counts globally, the need for medical assistance in achieving pregnancy is on the rise, he adds. Alpha IVF mainly focuses on assisted reproductive services with a strong emphasis in IVF and currently operates 2 centres in Malaysia and 1 in Singapore. While the cost of medical treatment has been rising over the past years due to medical inflation and the strengthening US dollar, Lee says the company has been able to absorb these rising costs without passing much on to its customers thanks to increasing economies of scale. The company also aims to target the largely untapped market segment of Muslim patients through the upcoming launch of its 4th specialist centre, which will be attached to KPJ Damansara Specialist Hospital 2, Lee said. Shares of Alpha IVF made a lukewarm trading debut on Friday amid subdued broader market conditions, reaching as high as 33 cent before closing flat at 32 cent. It was the 3rd most actively traded stock on Bursa Malaysia today, with over 271 million shares transacted. Yinson Holdings' net profit for FY 2024 jumped 63% year-on-year to 964 million on the back of revenue nearly doubling to 11.65 billion ringgit. For the fourth quarter of FY 2024, net profit rose 62.5% to 278 million, mainly due to the effect of charter day rate escalation, which was partially offset by lower contributions from engineering, procurement, construction, installation and commissioning business activities and an increase in finance costs. Revenue for the quarter increased to 2.7 billion from 1.96 billion a year earlier. Yinson declared a dividend of 1 cent for the quarter, taking full-year dividend to 2 cents. Reviewing its performance, Yinson said global demand for clean, affordable and stable energy continued to grow, which helped drive expansion of all its business units. On its prospects, Yinson said it remains optimistic about the future of its businesses, fueled by strong demand for energy. However, the group says it also recognizes the various uncertainties that exist in the markets it operates in. Hence why Yinson says that it is committed to putting sustainability and ESG front and center, which it believes can help it weather the ups and downs of the energy market. Supported by its existing portfolio of long-term contracts, Yinson believes that it can achieve satisfactory results for FY 2025. Paper and personal care product manufacturer NTPM Holdings saw a turnaround for its third quarter as it reported a net profit of 6.3 million for the quarter, compared with a net loss of 7.32 million previously. Quarterly revenue rose 11.8% year-on-year to 241.1 million ringgit. Moving ahead, NTPM aims to remain profitable in the coming quarter amid the positive results recorded that was driven by the adjustment in its market strategy. This includes lowering product prices, appealing to a broader customer base, increasing customer interest and fostering brand loyalty, among others. Notably, its tissue paper product segment, which reported a net loss of 10.5 million in the third quarter of FY 2023, has reversed to become profitable by 1.1 million in the current quarter. NTPM said its business operations remain challenging moving forward amid persistent geopolitical tensions, inflationary pressure and volatile foreign exchange rates, as well as the economic growth trajectory.